Hi, this is Vasant Ponkshe again, a retired officer from Bank of Maharashtra. My mobile number is 94223 19827. Now I'm pushing before you part number B of video 4 of my series 2, that is Bank Nationalisation to Bank Privatisation, in which I'm covering a period from 1969 to 2020. Up till now, I have already covered a period up to 2005. But as we cover this big period of 2005 to 2020, sometimes we will have to go forward, sometimes we will have to come backward also. So like that, I'll be trying to place my views and my information and my thoughts and my research before all of you. We'll go a little back to 2001. And in 2001, new era started in which more than 13 public sector banks, they came up with IPO. It was the first thing to happen. And the IPOs worth 8,499 crores IPOs they came. And OBC was highest in that with 1,450 crores. And in private banks, it was ICICI, which came up with the IPO of 3,550 crores. And banks to follow were Allahabad Bank, Andhra Bank, Bank of Maharashtra, OBC, Canara Bank, IOB, Punjab National, Vijaya, Syndicate Bank. Many banks they came. And subsequently in 2005, 2006, 2008, 2010, many banks came forward with their further offers that we call it as a FPO. So that is why banks in the share market under the control of SEBI also, one route was established during this period. Now looking back a little back to the ARCs, what was that? So the Sarsai Act, we call it as a Securitization and Reconstruction of Financial Assets and Enforcement Act, that was passed by the Parliament actually in 2002. But immediately the ARCs could not be formed. The first ARC was ARCIL, which was formed by State Bank of India and ICICI Bank as principal holders. And recently, if you check it, the ARCs have gone in big number, and the book value of loan assets taken over by ARCs from different banks in the financial years, I can share with you. In 2018-19, they took over 3,79,000 crores of assets for sale from the banks. Previous to that, in 17-18, it was 3,23,000 crores. In 16-17, it was 2.56 lakh crores. And bank typically offloaded their NPAs on those ARCs. And at present, there are 24 ARCs operating in the system. And subsequently, FICCI suggested National Asset Management Company called NAMCO. Now, during the period of 2005 to 2012, we can say that the poverty ratio of India fell by 15.17%. Perhaps it was the biggest drop, and it was a good sign that poverty ratio was declining. And with a happy note, I can share with you the data that the out of decline, the 21.5% decline was in Dalits and 17% decline was in scheduled tribes and scheduled castes. So these people, those who were supposed to be below the poverty ratio, poverty line, they came up during the period of, they crossed the poverty lines during the period 2005 to 2012. It was a big achievement. In 2006, as I have already told, the Manarega scheme was launched by the then government. And the next development was in 2006 when Tata Group, it acquired the Chorus. It was the first time any Indian company becoming multinational. And UK-based Chorus, it was purchased by Tata Group at the cost of $12.98 billion. Now coming to 2006, another milestone took place, and the petroleum and natural gas issued a new policy. It was also a new thing, which allowed foreign investors and private domestic companies, including National Oil Corporation, to hold up 100% equity in the pipeline projects of the petroleum and gas projects. Now in 2006, the concept of financial inclusion came into a being. Today we talk much about financial inclusion. We talk about 40 crores Jandan accounts, but the basis of it, the roots of it were sowed in 2006. And the explicit policy was issued by the Reserve Bank of India in 2006. And as for the policy, they were thinking of universal financial accessibility to the Indian population after 2005. That was the aim. Then what were the salient features of that policy? They were saying that making banking outlets available to the nearest village or town. That was first aim. That time they said after every 5,000 population village there should be a bank with brick and mortar. Then they brought it down to 2,000. Now nobody knows what the policy is. About that will come at a later stage. Then what was the another salient feature? To create an awareness about the banking services in between women. There were more than 23.1 crore women in the system as far as the then census was concerned, that they were the family owners. They were enjoying number one position in their own families. In traditions, there are some families who are led by women, but they did not have bank accounts. So that was there. And the third point was to formulate such products linked with economic status of the borrower, so that the rural population and poor borrowers, they can be helped by different type of products. Now, we should look at the census data of 2011 for this. At the time of 2011, there were 41.77 crore workers in India, of which 14.43 crore workers were agricultural laborers, and 50% of them, they were engaged in allied agricultural activities as compared to the census of 2001. In 2011, there were 36.2 crore main workers and 11.93 thousand crores of marginal workers as far as census 11 is concerned. Now we are close to 2020, we are close to 2021, and we can imagine when that time population was 110 crores, today we talk about 130 crores. We can imagine the number of main workers and marginal workers, how much it must have grown with the population. But we talk about the 40 crores of general. Yes, no doubt it's a great work done by public sector banks. But here I would like to make a point here that lot many is yet to be done. Lot many progress is yet to be done in the masses, in the rural areas. Now, when we compare the census of 2001 vis-a-vis 2011, I would like to share the data with you. The data says that there were, I will read the 2001 figure and then 2011 figure. Districts 592, 93 rose to 640. Sub-districts in 2001 were 5,463, now 5,921. Towns 5,161, now 7,933, now means 2011 census manual. Statutory towns in 2001 were 3,799, in 11, 4,041. Census town, they call it, there were 1,362, in 11 census, 3,893 census towns. Now I am going to share with you the figure of number of villages in 2001 vis-a-vis 2011. In 2001, the number of villages were 6,38,588. And in 2011, the number did not grow much, number of villages. The villages grew to the level of 6,40,930. So many villages came. Now, you can imagine what could be the position of 2020. Now, when we talk about the banking structure of public sector banks and cooperative banks and RRBs and all these things, I don't feel the number would go beyond 2 lakh. Number of branches, including RRB and all that scheduled commercial bank, would not go beyond 2 lakhs. And here the number of villages are 6,40,000 plus. And once RBI says that after every 2,000 population, there should be a bank branch. Recently, last year, you must be remembering that there was a directive from Government of India that the bank should, all the public sector banks should open, I think, around 1,500 new branches in just 1 year, brick and mortar branches. Figure I will check, but as I remember, 1,500 more branches were to be opened. That was the directive. And that is why I would like to make it a point that, yes, I am proud that public sector banks have done a lot from 2006, 2005, 14, 16, 18, 20. But one thing we should always remember that lot many things are yet to be done. And yes, public sector banks are surely ready to do that. And it could be anybody's guess that whether the private sector banks, those would be expecting profits after profits to be shared through dividend to the shareholders, whether it could be a cup of tea of the private sector bank. Now the network, there is a shortage of network, so that network has been compensated by way of banking correspondents and banking facilitators. 27 banks have adopted that formula, that model, and the transaction up to 2000 rupees are done by those correspondents and facilitators, and some small ticket loans up to 10,000, 15,000 are also being considered. So to that extent, the gap of requirement of the rural and semi-urban branches has been tried to be bridged by these banking correspondents and banking facilitators. And as far as the last report came in, there were around 2.5 lakh 2,50,000 banking correspondents and around 3,33,000 banking facilitators. Correspondents and facilitators they were operating. And nearly 117 million bank saving deposit accounts were dealt by these two. So they are the helping hand. But we will have to analyze as to whether banking correspondents and banking facilitators can they replace the beak and water branches. It's a thought-provoking point I am making before all of you. As per the, again, if we go back to the census figure of 2011, there were 23,333 villages with a population above 5,000. What RBI was saying, per branch per 5,000, but it's not so. And villages having population around 2,000 and above were 1,19,761. To that extent, we don't have even number of rural similar branches. As on today's network, even 19 network, 20 network, if we consider. As the census has been saying that, however, only 11,224 villages of this country with a population above 5,000 are having branches. And how many of the public sector banks are having branches there? It's a matter of great investigation. That's why I have been saying that yes, public sector bank deserve credit, public sector bank deserve applause. They have done a lot for the development of the Indian economy, but lot many things have to be done. And at the end of this series, I'll be sharing more data with you as to how it would not be prudent to make so much hurry or so much hasty decision about the privatization of the banks. Now, 2007 to 2012, the economy of India prospered in such a way that even so-called Bimaru states, in previous videos I told you who was the Bimaru states, Bihar, Madhya Pradesh, all these, Uttar Pradesh, those were considered to be Bimaru states. But they developed in 2007 to 2012. It was a big thing to get development. Now at technology level also, nobody lagged behind. The banks also did not lag behind. RBI and government did not lag behind. In 2008, the Reserve Bank of India introduced a check truncation system, that the conversion of checks from physical to electronic form, that system was introduced, and it was first rolled out in NRC, that is called Delhi, we call it. From 2008 to 2013, grids in the banks for check truncations have been introduced. And CTS has been implemented, as I told you, in New Delhi, Chennai, Mumbai. Now different grids have come. And it started right from 2008. And in 2008, it was Delhi. In 21st September 2011, it was Chennai. In April 13, 27th April, it was Bombay. And MICR-based check processing then subsequently has been discontinued. So in 2000, now this technology development has taken place. The another development which took place from 2005 onwards, that payment gateways came into being. They started from actually 2001, but they came forward, they came with full swing in real sense from 2005 onward. As we all know that a payment gateway is a technology used by merchant bankers, by the merchants, to accept the debit or credit card against the purchases made by the customers. And I would like to tell you that CC Avenue was the first payment gateway formulated in 2001. And who followed that? Then it was cash free. Subsequently, they followed, then it was, as I told you, CC Avenue, then MobiKwik, PayPal, Paytm, PaySharp, Rezaplay, EBS, Direct Pay, so many, Oxygen, so many payment gateways come. And subsequently in days to come, I will be covering how the small finance banks have come, how the microfinancing firms have come, how the role of NBFCs have come, what fintechs have done, that I shall be covering in the subsequent part. And the another development which took place as far as the industry, growing industry of India is concerned, Tata Motors launched the dream product 2008, nano product, nano car. What happened to that nano car we will be dealing in our subsequent videos. The another ticklish development which took place in the scene of Indian economy was about cryptocurrency, and the regulation India and RBI had to come out with the regulations about the cryptocurrency, and it's beginning to place in 2008 world over. A Bitcoin called a peer-to-peer electronic cash system. It was a pseudonym developers. We call it pseudonymous developer, anonym developer, and his name is supposed to be named, the fellow named as the Satoshi Nakamoto. Who is he? Nobody knows. Where he is, nobody knows. But he introduced it in 2009. And the first transaction against two pizzas at 10,000 bitcoins for two pizzas took place in 2010. And in 2011, many other cryptocurrencies began to emerge, that is Namecoin, Swiftcoin, so on and so on. And riding back on the waves of the popularity, a number of cryptocurrency exchanges started operating in India between 2012 to 17. So it was a big thing. So it started from 2012 up to 2030, the cryptocurrency market. Now it included popular currencies such as ZipPay, CoinSecure, Unocoin, CoinX, PocketBix, so on and so forth. And at that point of time, Government of India came up. The Government of India formed the interministerial group under the chairmanship of Subhash Garg, the then Secretary of Department of Economic Affairs, Minister of India. And he formed a committee, and the report was submitted in July 19. So Bitcoin started in 2008, came to India in 2012. 2017, a committee has been formed. Reports come in 2019. And the Reserve Bank of India introduced a regulation for cryptocurrency in April to ban the cooperation between financial institutions under the preview, under the preview of RBI, and business and cryptocurrency related businesses. So RBI banned it. Finally, the policy is enforced in India, and as India, where a large number of people, as we have discussed, 21% of the people, they don't have a bank account. More than 19 crore people, they did not have bank account 3 years back. So for them, cryptocurrency, those were well versed with the technology, but they did not have bank account. So cryptocurrency was a boom for them. It was a blessing in disguise for them. Though it is not good, though the international remittances, they contributed large part of the economic scene, and funds started moving out of India without any control. So it was a big threat. So it was a right decision taken by the Reserve Bank of India and Government of India by formulating a group to ban the cryptocurrency. And that was the major development as far as the cryptocurrency is concerned. So with this, I conclude part B of this video 4 of my series 2. And shortly, I'll be coming back with part C, in which I'll be dealing with NCPI, how UPI came, NCPI came, then how UPI came into being, then Beam account and Beam gateway and Satyam and all these things I'll be covering in part C. So till then, I take your leave. I'm very much thankful to you for watching this video. I'm very much thankful for appreciating my whole series. And my next series, which is likely to come, the recording of which I already completed, it will be a success mantra for a bank officer in challenging decades ahead. So at present, I take your leave. I end here part B. I'm thankful to you. Kindly await part C with a small gap. Till then, goodbye. Thank you.